Okay, I'm going to share with you some differences between what we are doing, trading the futures index market versus some of the other instruments out there. But please, okay, bear in mind that I'm not condemning, or I'm not knocking down any of the instruments out there. I'm not saying that only I'm not saying that what we are doing is the only instruments which will yield you profit, or which is the best. Okay, ultimately at the end of the day, it all depends on your character, your personality, how deep your pocket is, your capital, okay, and your time horizon. Okay, different people are attracted to different things. I agree. Okay, so there may not be one thing that fits all, but I'm just going to share with you what we know and what the feedback from our traders have mentioned to us. Okay, so first off, okay, with day trading the futures, okay, as versus forex. All right. Now I'm very sure all of you know what forex is, right? Okay, okay. After we have members who have traded forex for a while, okay, and they actually came to us, and after a while I asked them, look, what's the difference between what you were doing previously trading forex and what you are currently doing now trading, S&P, right? So they were saying that, hey, a few answers were given, but these are the two very common answers. First is that what we are doing trading the S&P 500 is less reactive to news, okay, but forex is very sensitive to news, right? Those who have traded forex before, you know what I'm talking about. Okay, at the point of news release, okay, markets can suddenly spike up or spike down, right? Very, very long. One bar can be many pips. Okay, now there is a reason for it, right? Forex is a pairing of two currencies, isn't it? Okay, you have US dollar and yen, US dollar and Swiss franc, US dollar and pound, for example, right? Now, because it's a pairing of two currencies, whatever news that come out that affect one particular currency will have a direct impact on the other currency as well. So the correlation is very strong, isn't it? It's a one-to-one correlation. Okay, but for S&P 500, no, it's a basket of company, right? There are 500 companies in there. Whatever news that come out that may affect 10, 20, 30, 40% of the companies in this basket. Okay, the other 60 to 90% of the companies may not be affected by the news. Don't get me wrong, we still have volatility, but it tends to be smoothened out. You do not have one bar that is many points, right? It tends to be smoothened out over time. Okay. Now, how about time frame? Generally, for us, the duration of our trade, I'm talking about duration of trade, the waiting time between our trade even, okay, the duration of trade usually is between 5 to 10 minutes. Okay, what it means is that by the time we get into a position, that means we buy or sell, to the time we get out of a position, okay, the average duration of our time in trade is about 5 to 10 minutes, right? For Forex, most of the time is much longer than that, okay, mainly because the waiting time in between trade is much longer, right? Now, generally, we have about, 8 entry opportunities, 8 to 12 entry opportunities within a 2-hour time span, depending on the volume that day, depending on the market that day, something we cannot control. Okay, but if you think about having 8 entry opportunities within a 2-hour time span, okay, basically 4 entries per hour, right? Right. So your waiting time in between trade is about 15 minutes. It's a very short waiting time. Okay. And I'll show you why we do not have to wait too long for a trade, because of the charting that we are using. Okay. Okay. How about futures trading versus stocks or option? Okay, let's talk about stocks, for example. Okay, for stocks, you need to have capital. It's basically a cash transaction, right? You buy stocks. Okay, I'm not talking about options or CFD, but you buy stocks. You basically have to fork out the full sum. Okay, let's say, for example, okay, I didn't check earlier on, but let's say Apple share is trading at $160 per share. If you will buy 10 shares, okay, the amount that you have to fork out to hold on to the share, okay, before it reaches your profit target, for example, is the full amount, 16,000, right? For futures, it's a low capital requirement, so that's why we feel that it's a good instrument for new traders, okay, to start off first, because you don't have to sell your house, in order to start trading. Okay, we are trading on margin. Okay, so the margin is lower, all right, so it actually helps in that sense. Okay, you don't have to have a huge sum of capital to start off first. As COP, we don't require our members to do any research. We don't trade with news, we don't trade according to news, etc. Okay, what we trade is based on what we see on our chart. Okay, Every strategy has a parameter, so we just see the pattern appearing. Parameters are there, we take the trade. So it's very objective in that sense. Okay, multiple trades per session. Okay, we focus only on one market instead of stocks where you have to monitor so many different counters, right? Okay, our risk exposure to the market is very short. Okay, for one simple reason. Okay, we are day traders. We are not swing traders. Okay, all my members are day traders. The difference between day trader and swing trader is this. Okay, for swing traders, some of you may fall into this category. Nothing wrong. Okay, they take a position, whether they buy, they go long or go short, and they hold on to the position even though the market has closed for the day itself. Okay, so day traders like us are different, right? We take a position and we get out of a position in 5 to 10 minutes. Okay, by the time we are ready to lock off, that means we finish trading for the night, we hit our target, we want to close shop, to go and sleep. When we shut down our computer, we do not have any open positions out in the market. That means we are not at risk to any exposure. We are not exposed to any market fluctuation, anything that happened overnight while we are sleeping, while we are away from the computer. I have friends who are trading stocks, options, warrants, CFDs, for example. Okay, when they take a position, and they normally take a position for a day, few days, weeks, months before they liquidate their position. Again, it depends on your time horizon. It depends on what kind of trader you are. How do you like? So different people have different way of perceiving the market and way of liking the kind of trading methodologies that they like. All right. Something that is very common or very popular the last few years, okay, is this thing called cryptocurrency. Now I'm not going to talk too much about it. Okay, you guys know what it's all about. In the first place, the question that always at the back of my mind is this: do we even know what blockchain really is? Understand, and what each currency is actually supposed to do? Okay, is it really safe? Is the execution really quick? Okay, blockchain, no, not quick at all. There are a lot of security concerns, isn't it? Okay, you heard of Terra Luna? Okay, it's supposed to be a very stable crypto, stable coin, for example. But what happens overnight? The exchange collapse, everybody just lost. Okay, and we have, personally, I'm sure you have heard stories of friends or acquaintances, okay, who have lost money in the crypto market as well. I'm not saying you can't go into it, but be careful. Okay, you may want to park a small percentage there if you wish to. Okay, but by and large, be careful what you trade. Okay, in the cryptocurrency. Okay, why do we feel that day trading is the ES market is ideal? Now, I've been a trader since the year 2003. It's been 20 years already. Right? I'm still considered myself as a day trader. I've never gone into swing trading. Why do I feel that way? Okay, and why do I feel that it's very ideal? Okay, for a lot of people, especially those around in our region. We have friends here today who are from Malaysia, and out of Singapore especially. So why do I feel that it's ideal for people around this region? Okay, firstly, I think it's affordable. Okay, your capital requirement is low. As I mentioned earlier on, you are trading off margin. You are not doing cash trading. Okay, and I find that, hey, it's a perfect timing for people here, in Singapore and Southeast Asia or Asia region. Okay. Let me ask you something. Okay, how many, you can actually type in the chat room, okay, or just give me an idea. How many of you actually sleep 10 o'clock, 10:30 at night, every night? Normal days. I'm not saying that you're very tired, right? How many of you actually sleep very early at night? Okay, no, right? Okay, how many of you usually sleep close to midnight? Okay, I think there are quite a number here. All right, so think about it, right? You come back from work, you reach home maybe about 7-ish. Okay, 7-ish. You have a shower, you have your dinner. All right. At the end of the day, by time 9 o'clock comes about, 9:30 comes about, what are you actually doing before you sleep? Okay. Some of you may be on watching television, okay, K-drama, whatever. Some of you may be on social media. Some of you may be helping your kids with your homework. Okay, some of you may be having to finish up some work which you brought back from office, right? Whichever. To me, there's nothing wrong with it. It's your downtime. You deserve it. You deserve to do whatever you wish to be doing at that point in time. But let me challenge you with something. Okay, what if, okay, you can make use of this 1 hour, 2 hour time frame before you sleep to do something productive, okay, that can yield you a second source of income. Right? You don't have to do it every day, you know, maybe about 2, 3 times a week. Okay, just something to pick up a skill as well. Okay, as well as to generate a second source of income for you. Would that be of interest to you? Okay, and this is exactly what many of our members are doing. They have a day job out there. They are doing trading. Okay, to generate a second skill set. Okay, and generate a second source of income for them. Also, in preparation. Okay, for the day where which they may not be working in a day job anymore, at least they have already equipped themselves with a skill set. Okay, uh, they can provide food on the table for the family then, and we are able to do this or to day trade consistently. Okay, it's because of two factors. Okay, one is a high volume, and second is that because S&P 500 is a very liquid index. Okay, S&P 500 is the most traded, okay, index in the world. Okay, very high volume, right? It's very liquid. Okay, because at every price level there are people who are buying and selling, right? So what that means is that it makes getting into a position easy. That means you want to buy something, there are a lot of sellers waiting to sell to you, so it gets in very easily. When you reach your target, for example, okay, you went long, for example, you bought, when you reach your target, you want to sell, there are enough buyers there to buy over from you. So what it means is that you get in fast, get out fast. You are not stuck in a position where you can't get out with profits. Okay. It also, and because it also has a very good daily range, okay, and volatility. Okay. Range basically means the highest price it has reached for the day and the lowest price. Now, if the range is very narrow, okay, it's very difficult to take profit, okay, to benefit from the market. Because why? It's very difficult for us to time the market, to buy at the lowest, to get out at the highest. Right? What we can only do is to tag along with the big boys. Right? So usually when they move, we are able, after they move a little bit, we are able to find an entry to tag along with them. Now, if the range is very narrow, if we tag along with them, it goes up, it may not hit our target, isn't it? Right? It may go up just before it hit our target, it turn down again, maybe, right? And then you get stuck within a range situation. But if the range is much wider, like for ES, we generally see more than 12, 13, 20, 30 points a day kind of thing. Even if it moves a bit and we catch an entry to take a trade with it, the market has enough buffer. That means it can run a more, okay, for your trade to pan out, okay, and give you profit. Okay, example, okay, is this, right? On this day itself, there are up and down movements. There are up and down movements. So even though market has been going up, okay, going up in this case here, there are opportunities for us even to take short trades to sell. Okay, and there's enough buffer there to take profit from there as well. 2, 3 points, 2, 3 points. Okay, so if it's going up, of course, I mean you can take a trade here and let it run more in a sense. Okay, another day, even when it was going up this way, okay, it's not just long trades which we can take, we can also take short trades. Okay, right? So this is another day of volume and volatility as what I was telling you about. Okay, but the most important thing for me, okay, as I mentioned much earlier on, because it's traded on the CME, is that I want to trade in a market that is regulated, transparent, and my execution is quick. Okay, execution is quick. That means I don't get stuck in a position. I want to liquidate it. Right? If you were to open 2 trading accounts with 2 different brokers, okay, and you log in on the same day itself, okay, and you watch the price feed coming in, you will notice that the price from each of these brokers, okay, both brokers will move in sync together. Okay, move in sync. There won't be any discrepancy there. Okay, that's what I mean by transparent, because whoever is trading ES in the whole wide world is trading through this exchange itself, and we are getting the feed from the exchange. Okay. Okay, so just in summary, okay, why day trading is ideal? Okay, because short exposure. Okay, as a day trader, okay, and your capital is freed up, right? Just imagine you took a trade, okay, very quickly you are out of a position. Another trading signal that comes along, entry signal that comes along, okay, allows you to then quickly take advantage of it to take a trade. That's why a lot of times, because we have a live chat room, right? I can see that some of my traders, some of our members finish trading within maybe half an hour, within 1 hour. They don't even need a full 2 hours there. Okay. And because as day traders, we don't face intraday risk exposure. We don't hold a position overnight. Okay. Low commission. We are working with the US brokers. Okay, the commission for one contract per round trade is about US $5. Okay, so it's very straightforward. Okay, there's no hidden charges in there. Okay, I've talked about the market. I've talked about what ES is all about. Let me just now switch over to talking about the way we trade. Okay, our methodology. What is it all about? What is the basis of it? Right. Now, all our strategies are based on price action. Okay, right? So we first pay attention to where the price is going. Of course, it's supported by a couple of indicators, okay, to help us to correlate the price action with supporting indicators to help us take high percentage trade. Right. Now we ride along a bigger movement. Right. Like I said, we are not the institutional traders. We are just retail traders tagging along with the big boys. All right. We ride along bigger movements. We are able to do that very consistently. Okay, our methodology is very objective. Okay, there's zero guesswork. Okay, I don't take a long trade because I feel that the market is going up, or I don't take a short trade because I feel that the market is coming down. There is no such thing as gut feeling in the way we trade. The reason being, because right at the beginning, I knew myself as a person, right? So I knew that I can get emotional at times. Okay, so I wanted a trading plan or a trading system for myself, okay, to be very, very objective, as if I'm making myself as a robot. So in the sense that every strategy, okay, that I want to use to trade must have certain set of parameters. The parameters must present themselves. So later on, when I show you one of the strategy called GTR, for example, okay, GTR has 3 parameters, right? So set parameter, you need to see that the parameter 1, 2, and 3 are present before you take a trade. Okay, you cannot assume that just because parameter 1 and parameter 2 are there, okay, you can take a trade because you got 67% chance of success. No, all 3 parameters has to be there. And because of this set parameters, because it's objective and it's not subjective, okay, 2 traders from 2 different ends of Singapore or even 2 different countries, okay, they can be entering at the same point using the same parameters, entering the same point, okay, let me just repeat. 2 traders, okay, whether 2 different ends of Singapore or from 2 different countries, okay, they can take the same trade at the same time without collaborating with one another, okay, because they are following a fixed set of parameters. Okay, that is as objective as I can make it to be. All right. So I hope I make it clear in that sense. Sorry for the I call that motherness earlier on. Okay, and because of it, okay, because of this, it's replicable, okay, and the system works and the strategies work to a very consistent basis. All right. So what we are actually giving our members through our program, okay, is strategies that has high probability. All right. We have multiple signals every night. Okay, we have anywhere between 8 to 12, depending on how the market moves. Okay, now it's summer. Okay, obviously volume is lower. We have fewer signal, but it's still tradable, right? Low risk. Every trade that you take must have a stop. Okay, so that you protect yourself. Okay, very clear mechanical entries and exit signals. Okay. Okay, so price action as a basis. Okay, sorry, I repeated. Now, the biggest advantage for us here is that we are using a volume-based chart, okay, instead of a time-based chart, right? Now, some of you here have traded before, or you are even traders at this point in time, and you're more familiar with a time-based chart. But volume-based chart, what is a volume-based chart? If I were to show you a chart like this, a screenshot of a chart like this, and I tell you that this is a tick chart, or I tell you that this is a time-based chart, okay, does it look like either one or the? Okay, it's the same. There's no difference. But this is actually a volume-based chart. Okay, so what's the difference? Okay, now a time bar, okay, a time-based chart basically means every single bar that you see on your chart is defined by a certain length in time, a certain duration of time. Okay, so let's say if I'm using a 5-minute chart, every single bar on my chart represent 5 minutes in time. Okay, represent 5 minutes in time. What does it tell me? It tells me that within these 5 minutes, the market is trading between 3001.5 and 3000.5. Okay, this 5-minute period, the market is trading in this range, this 1 point range. Right. Now, if I look over at the volume bar, okay, it looks the same, isn't it? Okay, it also tells me the same thing. It tells me that this bar is trading between this 1 point range, the highest and the lowest. Okay, the key difference here is this. When I'm using a volume-based chart, right? Okay, for example, I'm using a V500 bar. Okay, it tells me that every single bar here represents 500 contracts which has been transacted, bought or sold. Okay, a volume-based chart is not dependent on time. It's dependent on the number of contracts which has been transacted, bought or sold. Right. So maybe the next slide will help you see, help you have a better picture of what the difference between a time and a volume-based chart. Okay. Now this is a time-based chart on Russell 2000. Okay, a 2-hour time span. This was where market started at 9:30, the vertical dotted line, and this was where I did a screenshot at 11:30. Okay, so if I'm using a 5-minute chart, every single bar represents 5 minutes, right? In 1 hour, I will have 12 bars. Okay, so 9:30 to 11:30 is 2 hours. Using a 5-minute chart, I will have 24 bars. Okay, now the same day, the same time frame. But what if I use it on a volume-based chart? Okay. I stop counting somewhere here. I actually have more than 250 bars. Okay, when I'm using a volume-based chart like this, what am I seeing? I'm seeing more details. It's as if I'm using a magnifying glass to zoom in to a time-based chart here to see more of this up and down movement, all this price movement. Okay, more detail. And because of that, okay, it gives me multiple entries. I have more opportunities to take a trade. Okay. Basically, a volume-based chart is more sensitive. It's more sensitive, okay, to the price action, okay, to the price movement. In other words, we zoom it in, right? And not only does it give me more opportunities to take a trade, but if you notice, okay, if I were to enter a trade, the time in trade is much shorter. Okay, we are able to get in and get out very, very quickly. Okay, let me show you another 2 hours worth of a volume-based chart like this. Okay, bearing in mind that there is no way we can time our entry to buy in at the lowest and get out at the highest, right? So when the big moves start to run, all these big moves start to run, okay, we basically there is momentum. Okay, the volume-based chart gives us the momentum and signs on the chart to show us where to take our trade. Within these 2 hours itself, there were actually 6 entry opportunities. Okay, there were 4 opportunities to take long trade, 1, 2, 3, and 4 here, and 2 opportunities to take short trades here and this one. All right. Now the height of each of these boxes, is 3 points. You remember earlier on when we talked about it, we were saying that 1 point per contract on S&P 500 gives you how much? $50 US. So if you had taken a trade here, for example, a short trade here, and you got out here with 3-point profit, okay, that will give you $150 for every contract that you are trading. All right. You can see we do not have to let a profit run. Okay, there are multiple opportunities within these 2 hours, and we are just taking a small bite out of the market. Okay, some of you, I understand, you might have been trading for quite a while. Okay, and you're braver. You are much braver. Okay, compared to new traders. Okay, so you're saying, hey, why couldn't I have taken a trade here and instead of taking 3 points, let my profit run up here and take maybe 10 points? Possible. Okay, but over here at COP, a lot of you here who are joining our program will be new to the way we trade, will be new to all these strategies. Am I right to say that? Okay. Do you really have full confidence of taking a trade and let it run 10 points, 15 points, for example? No, right? You need to first learn how to walk before you run. You need to learn how to try out the strategies, to find that it works for you in a consistent manner, to find that it works for you, that this particular strategy you take, this particular entry you take, most times, it will give you X number of points. So eventually you will dare to let your profit ride, to let your trade run okay, to go for more points. And that's exactly what we advocate here and what a lot of our members have done over the years, right? For a start, they take their 2-3 points profit target, 2-3 points, they aim small first, okay? They aim small, build up their confidence, build up their account, at the same time, observe the market, learn, okay? And when they find that they are ready, they let it run a bit more, run a bit more, run a bit more, okay? I think that's the way to go, and don't be too garang right at the right at the start. You'll be so brave and you try to let your profit run too much. Okay, having said that, just a couple of points here. You know, I'm just wondering why some of you here who might have been trading before, okay, are actually attending a workshop like this, okay? People, traders who have traded for a while, right? Could it be because of some of the frustration and some of the problems that you have faced, okay, in what you are doing, okay? So what are some of the problems which experienced traders or people who have traded before, okay, do encounter along the way? Could it be that the method has not been working consistently for you? Okay, maybe market changes from time to time. The market can't work for different market conditions. Or is it that it works for you, but one losing trade, okay, basically wipe out most, if not all, of your profit. Okay, have you experienced that? Okay, or you find that, hey, how come my stop loss keep getting triggered? Every time I take a trade, before it hit my target, it come down and take me out, come down and take me out, for example, right? Or maybe you are trading in a haphazard manner. You don't have a system, okay, but a lot of guesswork, okay. Yeah, consistency, thank you, right? Inconsistency, right? No step-by-step method, nothing that is structured, okay. Or could it be that, well, you are not receiving any help or support, okay, any help or support? These can be some of the problems that is holding you back. These are some problems that might be holding you back, or might be, just inhibiting you from actually progressing to the next stage, okay? But then these are people who have traded for a while. But how about people who have never traded, who wants to come into the trading community, right? Who wants to start to do something for themselves. Okay, what are some of the problems that they may face? Okay, no idea where to start. What instrument, what market, okay, what broker to use, what app, what charting software, so many things. So mind-boggling, because right now you have a plethora of choices, okay, to make. So where to start? No idea where to start. Okay, there are so many options, right? Maybe you have experienced difficulty setting up. Okay, okay. Before I go into that, right? We understand this. Okay. COP has been around for 16 years. Okay, since 2007. Uh, Let me just say that for the first couple of years, we focus a lot on the strategies, giving people the edge. Okay, but over time, we also discovered that there are a lot of there are two other factors, okay, which the successful trader needs. Okay, to be a successful trader, you need two other things. So it's not just a trading system which gets you where you go, but there are two other components which are very important, right? So this is what we call the REP system. Okay, right. So it's a risk management, the edge, the winning system, and trading psychology. Now, everyone who wants to trade or who go through a program, looking for a program who want to trade, are obviously looking for a consistent profit, isn't it? You want something there for you. You want to be able to make profit consistently. So do I, But if we cannot do one without the other, we can focus on this one, but if we leave out these two, it may work for a while, but at the end of the day, it may fall short. Okay. So for the last 10 years or so, we focus on these three in our program, and we have seen our members make leaps and bounds in terms of improvement and consistency. Okay, let's talk about each of these individually. Now, edge, winning system. Okay, you need a system that gives you the edge in the market. Now, this is the first thing we offer. That's easy. Okay, to teach you the strategies. That's the easiest part, actually. All right, easiest part. We teach you to identify opportunities on how to enter a trade where there's a good chance that the trade will go your way. Okay. let me talk about our again, what is price action, okay, and then after that I will show you a demo of two of the strategies we use on a nightly basis. Okay, now what is price action then? What's oscillation pattern? Okay, some of you may be familiar with this, okay, but let me just go through it for benefit of those who are new to trading. Okay, for market to go up, okay, logically the logic says it that it has to start from a bottom somewhere. You see this cluster of two red bars? The lowest point of this cluster of two red bar is here, isn't it? This is what we call a support level, as support level. Okay, this is where the big boys, for example, they want to push the market to go up. So when they start buying, the market will go up. At a certain point in time, people will take profits. Because they bought here, they will start selling. Okay, that's where they push the market to come down. Logical, right? Okay, so this is what I call a pullback, a retracement. Okay, now, as long as it doesn't come down and break this support here, if the market sentiment is still bullish, it will turn up and give us what we call an up oscillation when the blue bars appear. And this is where we look for opportunities to tag along in the market, to take a long trade, to go long, right? Now, vice versa, if market were to come down, we know that the market is going to come down. It has to start from the top somewhere, what we call a resistance level. So this cluster of two blue bars, the highest point is here. That's what we call a resistance level. People start to sell first. When they take profit, they buy, right? They push it back. They form, this is a retracement. So as long as the retracement don't go up higher than the previous resistance level, okay, that means it form a resistance lower than the previous resistance level. If the market sentiment is considered bearish, it will turn down and give us a down oscillation with the red bar. Okay, and this is with the red bar here, a down oscillation. And we look for opportunities to take short trades. So actually, if you think of it, with this idea of price action, right, up oscillation, down oscillation, we can actually trade, we can actually take trades, okay? Now, the thing is that we need to identify, we need to know when to enter a trade. Because we do not want to enter a trade at the tail end here, isn't it? Okay, tail end, not much room, the market turn around and take us out. We want to enter a trade as early as possible, right at the beginning, right? Okay, so we came up with this strategy called AOS, very simple one. Okay, a lot of our members are using it. Okay, is to identify the first up oscillation or the first down oscillation in any series, right? Okay, over here, can you guys see? If not, let me just magnify it a bit. Okay, over here, the market has been coming down, right? Down oscillation, down oscillation, down oscillation. Okay, over here, market went up, it broke the resistance here. It broke the resistance here. There's a retracement. Okay, it formed a support here, which is higher than this support, and this then becomes an up oscillation when the blue bars appear. Now, then I ask myself, hey, look, if all this was coming down, if all this was a down oscillation, when it gives me an up oscillation, is this the first up oscillation? Yes, right? Okay, so as long as I don't have any contradictory signals from the other chart, this will be where we take a long trade. Okay, take a long trade. Now, after we have taken a long trade, what do we do then? Okay, after you take a long trade, for us, we adjust our stop, hands off. Okay, market will move. Okay, by the time it goes up, when it hits our target here, the system will close off our trade automatically. So for example, we enter at 2168. If we are aiming for 2 points, okay, it goes up, it goes to 2168, okay, the system closes off your trade automatically. You don't even have to manually enter to exit, right? And you make $100 profit. Okay. Now at this point, I'm going to give you a demonstration. Let me just bring up the chart. Okay, of what AOS is about and how we take the trade, how fast, how slow, etc. But before I go into that, let me just explain to you what you can see from the chart here. Okay, if you look at what has already happened, okay, we are here now at this current point. If you look at what has already happened, market has come down very strongly, right? All this, right? Okay, your higher volume chart is like your trend chart, for example, is telling you the market is coming down very strongly. Now, after coming down here, it tried to give me a down oscillation here, but it failed to break the support here. So it formed a support here, which is higher than this support, and it turned up and give me an up oscillation. Well, you might be saying, hey, all these are down oscillation. Isn't this the first up oscillation? Why don't we take a trade here? Let me ask you, if you know that the market is coming down very strongly, okay, a very strong downtrend, for example, would you want to challenge the market? Or would you want to take trade with the market? Obvious answer, right? You want to take trade with the market, right? You don't want to challenge, right? You are a lone ranger. You're trying to challenge what the big boys are doing? No. Okay. So over here, even though this may be the first up oscillation, we stay out. We stay out. We don't take. Okay. Okay. I'm going to describe to you what's gonna happen when I play the chart. Okay. These are all real data that is collected from the market on this particular day. So what's going to happen later on is that you're going to see some red bars that are formed. The red bars, let me just open up a bit. The red bars are going to come down lower than the support here. That means break the support here. After it breaks, some blue bars are going to come out. Okay, this is called a retracement. It will form a resistance here, which is lower than this previous resistance. And when it turns down and give me the red bars, that'll be the first down oscillation again. Right? Because it will be the first up, the next one will be the first down oscillation. Okay. Now, we will not enter a short trade on the first red bar. Later you'll see for yourself why. Because if the first red bar is not 100% formed, it may flicker back to a blue color bar. So we do not want to anticipate. Okay, we want to enter when there's confirmation, right? So we will enter on the second red bar or the third red bar when the confirmation comes about. Okay, I will play the chart back at actual speed. Okay, as I said, you'll see how fast or how slow the data is coming in on that day. This is the ladder in which we use to place our order, to execute our trade. If I want to take a long trade, I will click on this column here called the BID. If I want to take a short trade, I will click on this column here called the ask. All right, so far? Okay. Oh, after I've taken a trade, what I'm going to do is I'm going to pause it